Hello and welcome to Capraise podcast. This podcast series delves into news, trends, and educational material for entrepreneurs who want to be among the top 1% of successful founders. Today, we're taking a deep dive into a critical aspect of company finance: raising capital from existing shareholders. When a company seeks to boost its coffers, one option is to turn to those who already believe in this mission, the existing shareholders. It's like asking your existing fan base for an encore. But like all financial strategies, it comes with its own set of pros and cons. Now, what do we mean by raising capital from existing shareholders? It's quite simple. It's like inviting your friends who are already at your party to chip in for a few more pizzas. In business terms, this means offering current shareholders an opportunity to invest additional funds in the company, securing necessary funds internally without knocking on external doors like loans or new investors. Let's dive into the benefits first. Number 1. Increased financial stability. It's like getting reinforcements from those who are already on your team. They already have a vested interest in your company's success, and their additional funds can help steady the ship during choppy economic seas or fuel the jet for new growth opportunities. Number 2. Enhanced shareholder loyalty. It's like renewing vows in a relationship, reinforcing the bond between the company and its shareholders. Number 3. Simplified regulatory process. Fewer hurdles, more time to focus on running the business. Sounds like a win, doesn't it? Number 4. Faster execution. Need capital for a time-sensitive project? Your existing shareholders could be your quickest ticket to get that. And finally, number 5. Retaining control and ownership. Because nobody wants to lose their say in their own company, right? But there is no such thing as a free lunch, is it? Is this your first time tuning in? Don't worry, you're in the right place. I'm Eva, the fundraising associate at Capraise, and I'm here to let you know that if you're a business founder looking to secure funding, we've got you covered. Our team is dedicated to helping entrepreneurs find the best investors and pitch their ideas effectively to open the investors' checkbooks instantly. Just hit book a call when you visit www.easycapraise.com. So the first con is potential dilution of ownership. More shares floating around can mean less control for each individual shareholder. Second, limited pool of investors. Relying solely on existing shareholders might deprive you of fresh perspectives and potential strategic partnerships. Next, there is the risk of strained relationships with non-participating shareholders. It's like throwing a party and not inviting some of your friends. Bound to cause some tension. Fourth, restricted funding options. Putting all your eggs in the shareholder basket might leave you scrambling if they can't or won't cough up the funds. And finally, increased scrutiny and reporting requirements. More investment often means more demand for transparency. You've got to be ready to open up the books. All in all, there are some climates in which raising capital from existing shareholders can go a long way. This is especially true when there is a lot of dry powder which holds VCs back from investing in new ventures. That said, negotiating the new terms with the existing shareholders is as crucial as trying to convince new shareholders to get as few shares of the startup as possible. It's a dance of balancing the need for funds, maintaining relationships, and ensuring a diverse portfolio of investment sources. Like most things in business, it's about making informed decisions. Now, whether you want to raise from the current shareholders or prefer to add a few people to your cap table for your new round, the best way to get started is to work with a fundraising agency that can help you build a compelling story for investors, get them to write a check for you, and close the right deal. You can book a consultation call with us to scale your business. Just visit www.easycapraise.com. Don't forget to hit subscribe on your favorite podcast platform for more insights into the world of startup financing. I'm Eva, signing off, reminding you that even in business, it doesn't hurt to crack a smile or two. See you next time!